Good morning, trading world. It is March 20th, 2024, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook, this is a morning update, and be prepared. Have a trading plan for today's FOMC announcement. Now, although I didn't do a video, I did release a pre-market for overnight because with the European CPI and PPI, I thought it presented opportunities for a big move overnight if those numbers came out a certain way, but I guess it really didn't matter. But let's get into the pre-market. We pretty much held the battleground overnight that I listed in the update or the pre-market overnight. The important thing to note this morning is that the CME Fed watch tool has a 99% probability of keeping rates the same. Higher for longer carries on, and a lot of people in the market don't like that. As you can see here, the current target rate is 525 basis points to 550, and the probability is 99% that we remain right there. So you can watch this pretty much all throughout the year before, and it is definitely crazy to see this change. But believe Jerome Powell. He's told you, higher for longer, which is smart, because I did not think, even when he talked about, because he has talked about lowering rates, and that it's not a matter of if, but a matter of when. I never thought we had inflation handled enough to start thinking about lowering the rate. So, it's not a surprise to me that we hang here higher for longer due to inflation peeking its head back up or rearing its head again. That really isn't a surprise to me. And if you follow the pre-market analysis, I've talked about how watching some of these reports kind of give you a wrong or late idea about what's really going on. The government does a really good job of kind of manipulating reports to use data to kind of create or not create, but to back up a narrative that they want. So, again, this is no surprise. All right, let's get to the trading portion. All right, the overnight consolidation means extra energy for today's explosive move. The 2-hour chart is trying to turn over for a downswing. This could possibly carry over and get some momentum before the announcement, leading to a vicious sell the rumor by the fact. But this morning, the hourly time frame is most important, followed by the daily chart time frame, then the 4-hour. The hourly chart has already been through a downswing and beginning an upswing. Right now, the 4-hour chart is still in a nice upswing. So if the downswing on the hourly and 2-hour aren't enough to impact the 4-hour, it seems we are likely to continue moving up until the actual announcement. When the actual announcement comes, more than likely the first move will likely be a big head fake. Next, an equally shocking move the other way before carrying on the current trend. And just let me draw that up. All right, here we are back to draw up the likely path of the price action today. I went ahead and put up the intraday zones on the board so that we can have reference points. And one thing I want to say first is that the battleground area that we're in now, spanning from this 52.30 all the way up to this 52.58, even though it may not look like much here as it's drawn up, but this is a huge area. I mean, it is large by most standards. So coming into the meet or headed up to the meet, I talked about the hourly and 2-hourly differentiating in swings, where the 2 hours started to try to turn over or looked like it wanted to start a downswing, and the hourly had already been through a downswing and had started an upswing, and it's deeper into that upswing now, but it still has not impacted the 4-hour swing. The 4-hour swing is still a healthy upswing, and I would like to say it's closer to the end, but right now, just like when we say the condition of overbought, it is a condition, and condition can last longer than your account can stay solvent. I never try to predict, I never try to take a position based on that prediction of ending a swing. I like to see hard evidence that we have a rejection. Today, going into the FOMC announcement, excuse me, the projection, and this is just a projection, it doesn't have to happen this way. It just gives me a mental picture of what I'm looking for so that I've seen it before, so that I can react faster when it does happen. Again, this is a large area, so what I expect is just this gradual move to continue. Maybe a few down ticks, but just a gradual move for a big portion of the day leading into the FOMC announcement. And then probably once we get to that lunchtime chop period, things will probably, or more likely, flatten out at that time, leading all the way up to that 2 o'clock period, that the actual announcement. Now, once we get the announcement, what I'm looking for, it's going to be an outrageous move, but the first move that I'm probably looking for is probably going to be something like this. It's going to be a deep down move, that's going to take us back to this probably 52.30, maybe 52.22. But it's going to be one tremendous candle taking us back down into the support area. And the next move I'm going to look for is probably just as shocking to the upside. And then we're going to equal out and more than likely continue up for the day and probably reach into some of that resistance area. That's pretty much how I see today playing out. And then Thursday and Friday are going to be different stories. But this is pretty much what I'm looking for on the outlook. And then, in my opinion, we pretty much continue on the current trend after all the noise from FOMC. And then the actual change in trend should correlate with the trough of the daily and weekly, which the daily is expected between between March 22nd and March 31st. So anytime, excuse me, anytime between those two dates, we could set a course and start that downtrend. I just don't see it actually getting started today. We may take a chunk out with this down move to kind of help the RSI get back down to kind of foreshadow a move, but I don't quite see it starting today. But for most parts, that's how I see the FOMC moving today. Now, it doesn't have to move that way. We could get a complete opposite move, and that complete opposite move would be something like this, where we continue up, and once the bell rings, we can start this downward motion and build some momentum to the downside, and we can continue and continue and continue with a few push-ups in between, but we can continue that move until at some point our lunchtime chop steadies us off before the actual announcement. And then when the actual announcement takes place, we could get something like this, where we get an extreme up move, extreme down move, equalize, and we continue that trend down. So that's the other way that this could happen. Dealing with FOMC price action is a lot to do with feel and ignoring the smaller time frames. because this is one of the few days where tick can be reading something and you're following internals, and it will be completely off for a half or 3/4 of the day. Like, you will get an extreme divergence that seems to have no end for half the day. So you have to be really careful when it comes to that. So the trading plan for me is to look for the low either before or during the FOMC for a quick defined risk long. It's going to be selling a spread. If it goes down, I'm not going to risk a full position down because I don't trust support as much as I'm willing to lean on resistance. Meaning we've hit certain places or certain spots to the downside that I don't have as much faith or trust in them holding this go round. So if I do decide to enter into a long, it's not going to be a full position size. So on the upside, if we decide to continue higher first, I will look for signs and trade triggers around or above the 52.84 and 52.94 area. If I get those again, it will be a defined risk spread, selling premium to look for a future down move. And the expiration of that has to be closer to, definitely after the 31st of this month, but closer to the 15th of April. That's pretty much how I would want to play those shorts. If I'm looking, we continue up and I look to get short. I've done all this and I didn't even go over the actual zones. Looking at this now, our intraday support zones, the Jack zone is 52.30, Queen support zone is 52.22, King support zone is 52.08 all the way down to 51.98. On the resistance side, our Jack resistance zone is 52.58, Queen resistance zone is 52.67, and King resistance zone is 52.81, and there's another level all the way up to 52.90 above that. And then I'll write it in 52.90 is the upper end of that King resistance zone. Now, the important battle area or no man's land to hold right now is going to be this 52.30 to 52.58. I don't see us leaving out of this until after the actual announcement. So we're going to slowly grind our way up until the announcement before we make a break either way. Excuse me. Now, in this no man's land, the more time we spend below 52.44, the more it speaks to a bearish reversal. The more time we spend above 52.44, the more likely we retrace higher into the previous range and also push to possible new highs. On the other hand, if we drop lower, the support battleground is between 51.98 and 51.72. And the line of demarcation in between that is going to be this 51.86. The more likely, the more time we spend above 51.86, the more likely we are to retest and push to new highs. The more time we spend below 51.86, the more likely it is to push lower. Today's reaction areas are as follows: 52.33, 52.27, 52.21, 52.01, and finally 51.86. Remember, today is a very dangerous day. If you're not okay with your risk, it is definitely okay to sit today out, sit on the sideline and watch, because today is not one of those days for the faint of heart. As I like to always remind you, your most important job as a trader is to protect the capital you already have. We do this by knowing and understanding the risks you face in each position, as well as the current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's get out and make it a great one.